So today's New Year's Eve, Tuesday. I'm going to make Monday, yesterday's video, inside of today as well. So nonetheless, yesterday, Monday, daily time frame, we reached down into this daily fair value gap. Okay. And also I do have obviously these levels marked up, the SIBI premium high, 50% of it, and the low. So this daily fair value gap, we're inside of, well, we were inside of the range of that. And then yesterday, Monday's price action opened just above the fair value gap low right there, just above it, and then collapsed down into this daily fair value gap and the 50% of it. And then essentially coming down to the 1 hour time frame, we had Friday, Thursday, Wednesday. So these dividers are again every trading day, Wednesday, Thursday, Friday, yesterday. So coming into Sunday opening price, we had this 1 hour fair value gap that we tapped into, and then we collapsed. Okay, taking out Friday's low, tapping into the daily fair value gap right here that I showed you guys. Over here, rejecting higher off of it and tapping into the 50% of this 1 hour fair value gap right there, then collapsing. So breaking it down on the 15-minute time frame, 9:30 a.m. opening bell. We traded inside of this 15-minute fair value gap, providing an institutional order flow entry drill, collapsed to the downside, 100 plus pips, and then tapping into the range of this daily fair value gap. So the high, middle, low of it, we're now inside of that range, but I removed it for to making sure the chart stays clean. We rejected away from this daily level just up by a bit. And then essentially we came up and then into this 1 hour fair value gap right there. And then breaking it down on the 5-minute time frame is what it looks like. It's pretty straightforward 5-minute fair value gap after tapping into the 50% of this daily level. 5-minute fair value gap presented itself after breaking above market structure, going higher. This is Monday's first presented fair value gap, tapping into that right there, into this propulsion block, and then expansion higher. There's a fair value gap right there and right there as well, and so on and so forth. And then the 50% of the 1 hour fair value gap right here, providing a fair value gap right there for the collapse down into first presented fair value gap. But we're going to break it down the 1-minute time frame. Monday's first presented fair value gap, cascading lower. Another fair value gap right here, cascading lower. And then we dance around the 50% of this daily level. Right there, we're dancing around that on the 1 hour time frame, but I don't have it on this chart. Break above market structure, coming down into this 5-minute fair value gap right there. Okay. And then we have ourselves a 1-minute fair value gap right here. 1-minute institutional order flow entry drill right there. Breaking above market structure some more, confirming bullishness, tapping and trading down into the first presented fair value gap for Monday, using it as support to continue higher. And then we tapped into the 50% of this 1 hour fair value gap right there, providing the collapse down into Monday's first presented fair value gap right there, utilizing a 5-minute fair value gap after breaking below market structure and then collapse. That's your PM session trade. And then I want to break down today's price action real quick, just super to the point. We essentially were trading. Actually, I'm just going to the daily time frame real quick. I'm just doing this on the fly, of course. So we are today's Tuesday, New Year's Eve. I'm just going to remove. Actually, I'll keep everything else. But you see this daily. I'm going to just clear that. This daily candle, the wick of this, the 50% of this daily wick is used as resistance to push price down, right? Okay, so just keep that in mind. 9:30 a.m. opening bell is like right over here. On just jumping into the 1 hour time frame, I want to clarify again that 50% of the daily wick is right there. Okay, Sunday, Monday, Tuesday. And then we're also inside of the range of this 1 hour fair value gap. Draw that out in time using it as resistance. With this 1 hour fair value gap, and then also the 50% of the daily wick is used as resistance to push price down, taking out Monday's low, market maker sell model, taking out the sell side liquidity. And then I'm just going to jump into the 15-minute time frame, 15-minute order block, 15-minute order block. 50% of it is used as resistance to push price down. And I want to show you guys something here. Look at this 15-minute fair value gap right there. That is right there, precision. There's a small little fair value gap right there, tapping into the 50% of this order block as well, rejecting away from the 15%, rejecting away from the 50% of this order block, and then rejecting away from the fair value gap right there, and rejecting away from today, Tuesday's first presented fair value gap. And then we have ourselves one order block, another one right there. 50% of it is respected. Displacement. This was the meat of the move right here. This 15-minute fair value gap, boom, displacement right there. And then that is pretty much all that will really essentially happened. I'm just trying to really come down to the lower time frame, see if there's anything really pertinent. And if there's anything else that I really need to point out, not really, but nonetheless, just, taking out buy side liquidity right there, 50% of the 15-minute order block displacement, 1 minute fair value gap right there. Boom, displacement again. And there was this fair value gap as well, right there. So remove everything, just make it clear. But just to be kind of more clear, is there's this 1 minute fair value gap right there, and then one right there, and then displacement to the downside. And then I guess you can also draw this one out in time, and so on and so forth. I'm just trying to see if there's anything really relevant here that really, no, that's pretty much it. So again, the meat of the move was this 15-minute fair value gap. That's your institutional order flow entry drill. Boom, taking out sell side liquidity. That was the final leg of the market maker sell model. And happy new year.